Good afternoon, everybody. We're taking a look at Netflix on a daily chart with a 52-week high. Now, I'm going to take the trend line, and this right here, well, a lot of people in the technical world call that a doji. But here's the trend tool, and what I want people to understand, Netflix reports the earnings right after the closing bell on Monday, which is going to be 10/16. Netflix has gone straight up, making 52-week highs with a report. When they release that earnings, either if they miss, they're going to gap down big. But we're going to show you what the call charts and the put charts and the strike prices and how to make 550%. And also how to be on both sides of the trade. So yeah, you cut one, but then you let the other one run. We're going to show you in detail. This is a 52-week high. I'm going to pull up the call charts, the put charts. 99% of option traders have never seen them. And you know what I'm talking about. But they want to trade options based on what? Very quickly, Netflix ended up 3.63 on Friday, options expiration Friday. We made a high of 282 points. And now I'm going to bring to your attention how we're going to make money on the earnings report. Here on the daily, I have a $200 call on Netflix that's going to report to earnings. And these calls are ran to the moon. What does it mean? I could tell you exactly what it means. It's inflated and they're going to come down. It's mathematically impossible. Now, over here on this chart is a $200 put, which is totally the opposite here. We're totally deflated. And this is the area right here at the bottom. So basically what I'm going to tell you is that one side of the market is totally wholesale versus the other side of the market. And I'll blow this up. This is a $200 call chart, and this is a $200 put chart. That means that this thing has ran straight up going into the quarterly earnings tomorrow on 10/16 after the closing bell. And the very opposite has happened over here on the $200 put. It's gone straight down. And I can tell you one thing, the least amount of risk is here. The highest risk on the $200 call chart, it's at the highs. It's totally inflated. Take my word for it. Hold on 1 minute. This is a 10/27 put chart and call charts. Here is the call chart on Netflix. And there was 261 contracts traded. The low was $7.35. Now, let me just tell you something up front. This is 197.5 put option and call options. That's the call. I'm going to go over here to the 197.50 put. This is totally deflated right here. And I can also say this. Now we are looking at the inflated 197.5 call that will expire on 10/27. That's the put chart. This is the call chart. Over here is the put chart. And the put chart is at its all-time lows. So it has minimal risk. And buying down here to get in this side of the trade tomorrow is the right thing to do because it's wholesale. And then this is the 997.50 call on Netflix. Right now, I'm showing November 10th, a $200 call that's at its peak. Netflix reports after the close. This side has the bigger risk. Over here on November 10th, I have what we call a put chart. And we all know that you guys love to trade options, but what are you basing it on? I can tell you 99% of the people haven't seen a call chart or put chart. This is a $200 put chart. 1,595 contracts were bought. They were down $2.80. The last print on this put was 1035. Look at the longer you go out to November 10th, both on the call side and the put side, call side, put side. It costs a lot more money for the time premium. But how do I trade Netflix before the quarterly earnings that close after the bell, and then options are not trading? You're in it to win it. I'm going to show the $200 call, which expires on 10/20, which was up $1.40. Now I'm going to proceed to the November 17th. What we have is the 11/17 $200 call, and here is the call chart that has ran parabolically up. And Netflix reports the earnings after the closing bell. Also, the $200 put for November 17th. So we've covered various different strike prices. Now we're going to show you how to make a lot of money. We're going to get on both sides of this trade. This is the trade that we're going to make. This is a 195 call, everybody, and it's parabolically gone straight up, going into the earnings on Netflix. And the high was 13.85. Now on the 195 put, which I'm going to show you very carefully, it's going to be right here. This is the put contract. It was down $2.08. This is the side that we're going to buy. It's what we call out of the money with a monthly time premium. Over here, I'm going to make it very clear where you can see both sides. This side's inflated. It's not going to stay up here. And on their earnings release for the call side of the market, there's not going to be much of a movement up. Here we go. This is where this put option was, right here. So we go back and we go to this date, and I'll show you the date. And here's the most important thing, is how do I get paid? And that's what counts. We're going to show you why and what we're doing, and the reason why you need to get here. There it is right here. It was a lot inflated over here too. This side of the market's gone straight down, and it's a 195 put, expires 11/17. It's a monthly premium. This side of the market is the side that we're going to buy. And the reason why, we buy this at its lows, and then we're going to take a look and see what happens, and we're going to get some up and out of the money calls. Inflated call chart, 195. Deflated 195 put. You can see it right here. It's pure, simple, and wonderful on how to play the earnings season. So what you need to do now is get in the free trial, freeoptiontrader.com, and get busy and watch us as a market maker how to make all this money, what side to be on, which side is ran, knowing when to sell them, knowing when to buy them. We had the calls over here, and they've gone straight up, and we sold them. And now we're buying this side of the market, and we can't lose money.